this, unmute that, and we gonna get to it, man. We're gonna get to it. Shout out. Not in the early day here to learn the shit. It's just that old Jim had some questions, and I ain't feel like typing all that out. Then I pulled up in the voice, and I was like, "Hey, Jim, pull up." Jim ain't pull up. And then Kashai was like, "Oh, Tim, you probably should record it for him because he'll appreciate that later." And I was like, "Kashai, I ain't finna record nothing for him. He should have been here." Then she was like, "Nah, Tim, but he'll really think you a nice guy if you record it for him." Then I was like, "You know what, Kashai, you right. I'm going to go ahead and record it for him. But I'm going to record it straight to YouTube because I don't feel like, recording it and then having to bounce it down, then having to paste it, you know what I'm saying, put it on. So I'm just going to record it straight to YouTube." She was like, "Yeah, that'd be a good idea because, he'll think you a really cool guy if you did all that." And I was like, "Okay, then. I like being a cool guy, so that's what I'm going to do." Hey, this says that the stream is currently, we recommend you use. Hey, do my stream look crazy? Do my stream look crazy? Here, learn the show. It said my stream. It say good. It says good, but it's saying the stream something. It's like the stream is something, and we recommend you doing something. Stream health. Okay, it's normal. Okay, I was wondering why it was saying it was giving me some kind of message over there. Anyway, exactly. Yeah. Okay. Exactly. All right. So what we talked about? We talked about. We're gonna look at. We had this question here addressed to me from you, JimBigBird. You said that you having issues when you pick your PD array, right? You notice that sometime, right, price will reach it, but then it'll go further than you expect when you get down to the lower time frame, and you don't know if it's gonna trade all the way through it or if it's just taking out some kind of liquidity before going back, whatever, right? And then I was like, hey, you got to allow for price to go to the furthest regions of the world when it's going. So look for the, you know what I'm saying, the PD rate that's in the deepest discount or in the deepest premium. That's what you want to be looking for. And then also I said try to not drop to your lower time frame until a significant PD rate is reached, right? A significant one, like when you come into a weekly, daily, high or low. If you're nowhere near a weekly or daily high or low, if you come into a session high or low, right, then start looking for the reactions around that time. You know what I'm saying? Start looking for it there. Right, or dropping down there, right? Okay, so Tim, you said a whole lot, but what do you mean by that? All right, let's look at the chart and see. So we looking at the NQ chart right here. This is the NQ chart, and we're gonna hide all this stuff here, right? Hiding everything off the NQ chart there, and put all this in a folder real quick, and then let's go. Gonna hide all that. All right. So now we're looking at the NQ chart here. All right. And for example, like I say, I talked about waiting for price to come to a significant point, right? So we're going to, in this example, we're going to look at this low right there. This is a daily low. So we're going to look at this daily low as our significant point, right? We're going to put box bottom day right there, right? This is our significant point, right? And so what we want to do, we want to, we're going to, well, we can leave today because price is fractal. Price is fractal. Now, this is what you're looking for overall. Now, mind you, now, when we reach this specific low, right? This is on October 31st, right? And then the reaction comes throughout November 1st, November 4th, November 5th, November 6th, right? It's coming through. So we're reaching it on this Thursday, and then the reaction comes through Friday, Monday, Tuesday, and today, right? That's the reaction. But just think about it as price is fractal. So you're looking at, just say, a 15-minute candle, right? Another 15-minute candle, another 15-minute candle, another 15-minute candle, another 15-minute candle, or whatever time frame you want to think about it on. You know what I'm saying? Because price is fractal. This is this is what you're looking at, right? So we coming to a significant area, right? A daily low. Remember I tell you, looking at daily lows, weekly lows. If you're nowhere near daily lows or weekly lows, you're looking at session lows or highs. If it's if it's the reverse, right? Jim, you here, Jim? I've been doing all this for you, Jim, and you finally here, right? So you're looking at and if it's the reverse, you're looking at the highs, right? So lows, highs, lows, highs. Okay, all right. So when price comes into this significant PD array, right? You're coming into a low, right? I like it when it's going into a daily low, a daily high, a weekly low, a weekly high, because what rests up under there stops, right? What does the algorithm need? They need them stops as fuel, right? So I love it when it's coming into a swing low or swing high. This, you can use the same concept for when you're coming into a fair value gap, like over here, for example, right? When you're coming up into a fair value gap, it's a higher time, it's a daily fair value gap, right? So you're coming up into a daily fair value gap, and then you look for price to come down, right? Because we came up here, we took out this high, right? And then we came over here, then we broke down, taking out a low, create a fair value gap, trade back up into that. You're anticipating this to push price down, and so it does. So you can come into a fair value gap, but I really like it when we're coming into liquidity, right? Now again, price is fractal, so ignore the fact that these are daily candles. We're just looking at what we want price to do. So as price comes into, right, this, right, daily low right there, we're coming into, we just gonna say higher time frame, right? Higher time frame low, right? Right? Oh, we're gonna say significant low because we said a significant thing. So this is our significant low. All right, our significant PD array. Right, that's what we're gonna call that. This is our narrative PD array. Right, so we're looking at it on our narrative PD array. This is our narrative, because you got your narrative. We're looking at our narrative. We're looking at our structure, and we're looking at our entry. Right, so this is our narrative. Right, our narrative PD array, right? ARP. Right, this is our narrative ARP right here. Okay, and then once we hit, right, we're there at our narrative ARP. We're on a daily chart, so we're gonna go 2 time frames down. Right, going down to a 60-minute. Well, let's go back to the daily real quick. Right, and we're gonna put a line right here, so we know that everything to the left of this line, this is when we first traded into it. Everything to the right of this line is after we traded into it the first time. So we go to our structure time frame, right? So now we're on our structure time frame here, and we see that, right? We see that we came into it here. So this is when we start watching price right there, right? Right, this is when we really paying attention, right? We really paying attention, because now our structure time frame, right? Our structure time frame has come into our higher time frame PD array, our narrative time frame. So the structure has come into the narrative. Okay, Structure has come into the narrative. Now, this is when we're watching price now, okay? So now let's go here. This is our narrative, and this is our now let's back up before we hit this. All right, so we can figure out how we got there. Okay, so we're gonna back up before we hit it. Okay, so now if we go back before we hit it, now looking at what price has done, right at this point here, let's go all the way back over to this point here. Let's go back here. Right, we're gonna go back here because we're gonna look at it from both ways. We're gonna look at it from the bullish and the bearish side, right? So we're gonna back up to right here because we need to talk about PD arrays, what to choose, right? So now looking at what price has done, right? Before we get into all this right here, right? You want to identify, and this is for whatever you watching, right? We watching really higher time frame stuff, but this is the same concept, right? So from this low to that high right there, that's our dealing range right there, right? Price has engineered buy side, right? Price has engineered buy side liquidity, okay? Right. Price has engineered buy side liquidity here, all right, and price has engineered sell side liquidity here, okay, because we've created a low and a high, right, and that's our dealing range, okay. Okay, this is our dealing range. So now price, because we came down, right, took out a low, right, and then made a swing low. So now we got stops under there. We traded up here, took out a high, right, and made a swing high. So now we got stops up here, right? So now price has given us a dealing range, right? Price has given us a dealing range. When we're looking at our dealing range here, right, as we look at our dealing range, right, what do we have up here, right? We have relative equal highs at the high, and we got a single low at the low, right? So now we're watching these highs and we're watching the low to see which one price engages with first, right? You want to let price engage with the liquidity first, okay? And so now at this point, you're just waiting. You're not picking out any PD arrays. You're not doing anything. You're just looking at, I got buy side liquidity here. I got sell side liquidity here. I got relative equal highs here. These are high probability because the high on the right is lower than the high on the left, right? I got a single low at the bottom, right? And this is my dealing range here. And we're resting. We're pausing in a premium, right? So price is here, pausing in a premium of our dealing range, right? So let's come here, and I'm just going to put a line here for equilibrium. All right. We're going to put a line there, and we're going to call this equilibrium, right? That's our equilibrium there. We're going to make it a dash line. Oh, it's already a dash line. We're going to make it a 2-point dash line. All right, now we can move this fib out the way. Right, that's our equilibrium. Okay, we're resting in a premium. Okay, now that we see that we're resting in a premium, we see our buy side, we see our sell side. Now you want to wait for price to engage with one of the liquidities, right? And then, so in this case, we engage with the buy side first, right? Now, since we engaged with the buy side first, okay, now once you engage with the buy side, right, even if you even if you don't have a narrative, if you don't have like it's better when you have a bias, but even if you don't, but when you engage with one of the liquidities first, then you look for signatures that it either wants to continue or it wants to reverse, right? Because you're at a key level, right? A significant what's the name? What did I say in the thing? Right? We're right here. See right here where I said look for also try not drop into your entry time frame until a significant PD array has been reached on your structured time frame, right? Like a daily high low session. If you're not trading near a daily high low, then you'll be looking for a session, right? Now, this is over many days, so we're not looking at time specific right now. But if you're just looking at one day, then you want to account for your kill zones, your macros. You want to account for the time specific stuff. And we'll look at some time specific examples in a second, right? But what we're looking for is our structure time, because we looked at a daily to get this range, right? This is our narrative right here. This is our dealing range right there. So that's off our narrative time frame. Now we're on the 1 hour. That's our structure. That's 2 time frames down. Daily, move over to 1 hour, right? So our 1 hour, right, structure time frame comes into our narrative, right? And then right here, right, if we look here, if we look right here, right, if you look right here, right there, our structure time frame, right? Our structure time frame, it gives us this right here is a shift in sentiment for me, right? If we would have traded above that high and then came down, then that would be a break in market structure for me, right? So we got a shift in sentiment here, right? Right there, we come down, we push up, respect this, right? Right, we respect this PD array there, right? We take out the high there, then we come down, break down, take out the low, right? We're showing weakness on our structure time frame, right? So our structure time frame is showing weakness right here. Now, the better way, I ain't gonna say the better way, the more confluence way to do it is to start watching your entry time frame after this happens right here. After we come down there and get that shift in sentiment, right? That's, just like getting the break in market structure. This point right here would be the more confluence or the more confirmation way of starting to watch it here, right? So let's put a line there. We're going to put a line here. We're going to put a line right there because that's when this candle trades down below that, right? And we're going to call this structure time frame shift. All right, that's what we're going to call that right there. Structure time frame shift. Right, and then we're going to put a line here for right there when we on our structure time frame. This is when we traded up into, like, as soon as we traded up into this here, right? As soon as we traded up into that there, right? We're gonna start watching from there, from when our structure time frame hit our narrative time frame PD array, right? So we'll say structure. Spelled that wrong, I think. Structure time frame hit. We just gonna say hit. Right. liquidity. Structure time frame hit liquidity. Okay, so now over here, this is the point where now we're gonna go to our entry time frame, right? So this is on our entry time frame, 2 time frames down, boom, that's the 5 minute. Okay, so over here, right? And like I say, this is over a large period of time, but you're looking for the same stuff, right? So over here, this is when you're, let's go back to our structure real quick, because we talked about PD arrays, picking PD arrays. Okay, so we're gonna come back to our structure time frame, and if we start watching price as we enter here, we really don't have anything over here to mark too much, except for, right, coming down here, we got a SIBI. This is our, right there would be the move once we put up in there. So we got a SIBI down here in the discount that we can mark out on our structure time frame. Right, so we got a SIBI right there in the discount. I mean a BISI. I said SIBI, I'm sorry. We got a BISI right there in the discount that we can mark out. All right, got a BISI in there in the discount we can mark out because we're going up here. And then that's the discount PD array. So you got the premium and you got a discount. These are bullish PD arrays. So I'm looking at these bullish PD arrays. You know, I'm marking these out for the purpose of buying off of, right? So then if we look up here in the premium of the move, right? If we look up here in the premium of the move, we have a BISI here in the premium, right? And since that's in the premium of the move, we're really not looking to buy off of this, right? We're not looking to buy off of this, but if price got active to the downside, you could potentially be watching that as maybe becoming an inversion, right? This kind of stuff you can like plan out in your head, be like, okay, if we get animated to the downside, this is in the premium, so maybe I can look at this as becoming an inversion. That we're going to make this like a gray color, right? We're going to make that a gray color because we anticipating it to maybe become an invert. You know, you can think about stuff like that, right? Okay, is this going to become an inversion fair value gap if price get animated down, but it's in the premium, right? So as far as for buying, you're only looking to buy off of something in a discount, and as far as for selling, you're only looking for stuff to sell in the premium. Okay, so for this right here, there's nothing to mark out. Now let's look at over here, right? Let's look at over here. If we don't start watching our lower time frame until this point right here, then we would have this up here as a bearish fair value gap, right? We'll have that as a bearish fair value gap that we already traded up into, right? We got that as a bearish fair value gap that we already traded up into, right? And then if we start watching here, right, for price, once it come down here, once we drop down below that, if we start watching there, right here, we got price for that. And then, I mean, we got that up there that we already traded into. And then we have this mitigate. We got a mitigation block here. This is stuff that I typically don't mark out my mitigation blocks and breakers, but this wick here is overlapping. Well, now we know it's overlapping with that SIBI, so you want to see sensitivity in there. But when we drop down below, now we got that mitigation block wick right there, right? Once we go down below that, so now we're looking from here over, right, is once this candle closes. Everything from this line to the left is once this candle closes when we go to our entry time frame. So this is the only thing we got marked out when we come to this point, right? When we come to this point right here, that's the only thing we got marked out on our structure time frame. And then you see as price builds, it's more and more stuff getting built out. Now go to our entry time frame, and we're going to look at it from over here at this point, right? Let's come over, coming over here. So over here at this point, when price first trades up into this right here, right? When price first trades up into this area here, this is when we're watching on our entry time frame. We've come to our narrative time frame, anticipatory reactionary point on the 1 hour. So now we're watching it on the 5 minute from this 240 candle, right? And now once we come to our entry time frame and we're watching it on the 5 minute from the 240 candle, I can move this out. I ain't got to move it, but we're watching it now. Okay. And so price poked above it, right? And then we pulled back down, and then we displaced up, right? Price pulled back down and we displaced up. So now we're above this area here, right? We're above this area here. We're above the liquidity. We're in the liquidity area there, right? And when we come into the liquidity area, it's the same concept, right? We're watching the same concept. So once we went into the liquidity area, we made a low here, right? We made a low there, right? We made a low. Okay. We made a low. Okay. We came up. We made a high right there. And then these highs, we got relative equal highs up here and a single low right there, right? So you're imagining that price hasn't come here yet, right? So as we come into the liquidity, we make a low, we make a high, relative equal highs, right? And then we drop down, we start to drop down here, right? So now at this point here, right? Now that we're on our entry time frame, right? This is our entry time frame, and we're at our higher time frame point, right? So let's go back real quick, make sure we clear, right? So while we were on our higher time frame, remember, price had established a high, it established a low, and we was waiting to see which one it engaged. Price engaged with the buy side, right? So once it engaged with the buy side, then we went to our entry time frame, right? We went to our entry time frame, and now on our entry time frame, right? Because on our structure time frame, we engage with the buy side from our high. So now on our entry time frame, we're looking at the same thing, right? So on entry time frame, we touched that, we made a low, we made a high, and so now we're waiting to see which one price engages with, right? We want to see which one price engages with, right? So now price came down, it pulled down, right? And engaged with the lows, right? And then it went back up and took out the highs. Now, at this point right here, right, once it engaged with the lows, now you're looking for a reason to enter, right? Because it has chosen to engage with the lows, right? It did not displace through, right? It came back, respected the low, and then we traded down, respect consequent encroachment of that wick. Then we blast all the way up and took out the high right there, right? Took out the high, right? And now price is here. So this right here, if you're aggressive, right, this right here can be a change in the state of delivery. Price trades down to your change in the state of delivery. Then it pushes back up to take out the to engage the buy side, right? So it's the same thing. Yes, this is a super long wick. Ignore that wick. This probably was some type of news at the end of the day or something. But like I say, these are daily candles, so ain't no telling. This over a daily time frame, so ain't no telling why this so long. But this super long wick, you know what I'm saying? And then price comes back up and officially engages with the top side. Even if you look here on the creation of the order block there. Once we trade above that, we got the order block. Price comes back down inside the order block, right? And then we trade back up above there again, right? And then looking at this right here, you can even go down to the 1 minute and look for a better entry inside the 1 minute. But it's all about letting price show you what it want to do, engage with liquidity, then start looking for the PD arrays you want to enter off of, right? And you want it to happen at, you know what I'm saying, like the furthest regions, if you will, for the anticipatory reactionary points, right? And so we see here, and you say, okay, Tim, this is too rich. I'm not trying to buy up here. I don't blame you, right? I don't blame you. You're not trying.
Before you move on, can I ask a quick question
Yes.
from this area? Sorry. When it engaged with the sell side first, you said like it didn't displace through it. Is that what you're looking for before you think that you're gonna like sell short? Because it respected the low, and I'm
Yeah.
thinking like I know that's a break in market structure, but in this case, you're looking for displacement or no?
Yeah. Yes. If it when it sets the range, right? When it engages with the liquidity, whichever liquidity it engages with first, if we're not displacing through it, if we, you know what I'm saying, get like a rejection off of it like that right there, I'm looking for some kind of signature that we are reversing. And in this case, we reject off it, and then we immediately trade back above that open right there. So that's a telltale sign that these two down close candles gonna become a order block. And if you're aggressive, you can look at it, because the order block is the entire down close candles, but the last down close is like the focus, right? So if you're anticipating this rejection to take you back up, because we barely poked above this high right here, right? So if you're looking at this as, okay, we just taking out some liquidity to continue up higher, right? Then you can say, okay, that rejection off of that low, right? Then I can use that as a change of state delivery and get long off of it. Or we could even refine it down to like a 1 minute time frame, right, at that same little area there, right? So now we're looking at the same area on the 1 minute time frame here, where now we can see, okay, we come down below there, and we got, right, we came down below there, got a closure below, but then we immediately reverse back, right? Remember what I've talked about, when we get like a closure below a low, when we anticipate in price to dig deeper, like we barely poked above that daily high, right? Then we come down and we sweep this liquidity, and then here on the 1 minute, right, then now you can be looking at that as you're changing the state of delivery to try to get long off of there, right? And then here on the 1 minute, you see like when we got this pullback right here, this was that long wick where we went up and took out that buy side, right? We got a long wick, right? We attacked the low, came up, took out the high, and then retraced back down into the fair value gap right there to push back above the high one more time and touch that rejection block there, right, before coming back down and then going up further. But yeah, looking for that, a signature of, are we gonna continue or are we gonna reverse? That's what I'm looking for. Like looking for those signatures to show which way price is trying to go. Make sense?
Yeah.
I don't know what you said, but okay. I don't know what you said, but okay. All right. You kind of broke up. So now we're gonna go over here, and you say, okay, we up here in the premium. I'm not trying to be buying up here, right? I'm not trying to be buying up here. I'm looking for reasons to sell, right? Okay, I got you. Um, that makes sense. I wouldn't be trying to buy up here either, but we're looking at the signatures, okay? So now from watching it on our entry time frame, from when our structure time frame first touches it, right here, we're still at that point in the game, right? So once we get there above the liquidity, right, we see that we go up and we trade back down into, oh, this 15 minutes. Let me go to 5 minutes. I'm sorry, I was on the wrong time frame, right? We see that we get up there, right? We go in the direction where price should go. We immediately turn around, take them out, right? What do we say that is? When we reverse back, right? Wig snatcher, right? We go there, right? We come up, take out the low, come back up, take out the high right there, trade back down, and push higher, right? That's an opportunity there. But you say, okay, Tim, you're still showing me longs. I don't want to go long, but we just seeing like these are different signatures that you're looking at, because the whole thing is, hey, I'm picking the wrong PD arrays. But when you see we're at a key level, right? We're at a key daily level, and on our 60-minute, right? On our 60-minute, the only thing we have as far as PD arrays is a fair value gap way down here, and then a possible inversion fair value gap up here, right? Because we're still up in the premium of the move, right? We're in the premium of the move. And then once we get up here and we start doing all this right here, right now we like, okay, price is done with this area here. Right, so since price is showing me that it's done with this area because we've gotten above here and starting to engineer liquidity, right? So now we're like, okay, price is done with this area, and that would come into play, you know what I'm saying, once your structure time frame has done this for a while, right? This is our structure time frame. At some point in this, you come to the realization, okay, I'm consolidating here, right? We've come above this area, so price is done with this for a while until it finishes some kind of business. And then once we come back to this, I'm anticipating it to act as support or slice through it like butter. Okay, so now go back to our 5 minute, right? So those are the PD arrays. That was the only PD arrays we had on our structure time frame. So we're still dealing with our narrative anticipatory reactionary point right there, right? And then so now once we saw like the wig snatcher set up right there, and then now we get over here where once we got the wig snatcher here, right? We came up in the direction we supposed to go, took out the lows, came up, took out the highs, right? Traded back into the range and then pushed up above here. Now that we've done that, right? Now that we've done that, we got our wig snatcher, right? Looking here on our entry time frame, right? We're on our entry time frame now. And on our entry time frame, while we're at our higher time frame PD array, it's this high, right? That's the only PD array we had. We at this high right here, right? We get a bearish breaking market structure right here on our entry time frame, right? We get a bearish breaking market structure on our entry time frame right there, right? So let's mark this out here where we get this bearish breaking market structure, right? So we get our bearish breaking market structure right there. Okay, at that point, right now we got a bearish breaking market structure, right? And this is on our entry time frame. So at this point right here, now you're looking for PD arrays that you can go short off of, right? You're looking for PD arrays that you can go short off of. And what do I always say about what I want price to do before I go short, right? I want price to take out opposing liquidity before I want to go short, right? So now at this point here, right? Let's come here. That's when we took it out, So now we always want to be in line with our structured time frame, right? So let's go back. Sorry for those that I'm jumping around too much for, you can't keep up. So at this point is when we took it out. So right now we still don't have anything on the 1 hour that we want to mark out as far as PD arrays, right? We don't have any, right? We don't have any type of bullish fair value gaps going on here, right? We got a lot of overlapping price, so there's nothing that we would want to mark out on our net on our structure time frame, right? So back here, right? So now our structure time frame, we still don't have anything that we want to mark out as far as PD arrays we can draw into, right? We got us a bearish break-in market structure here on our entry time frame, and then price starts to drop off, right? We drop down, coming all the way down, right? We're engaging liquidity here, right? We take out liquidity there, right? We consolidate a little bit, we take out liquidity here, but we're still taking out liquidity to what? The downside, right? We haven't engaged buy side yet, right? So we come down, we're taking out liquidity, we're steady going to the downside, right? But then when we come back here, right, what's resting here? We got buy side liquidity resting there, right? We got buy side liquidity resting there. And so let's move over here to when we take out this buy side liquidity there, right? So we take out the buy side liquidity here. That's at 10, right? So that's right. Let's go to the 60 to see when this was created. I want to see when this fair value gap right here was created there, right? So when this at everything to the right of this line, everything to the right of this line, I'm gonna move this line out the way. Everything to the right of this line is after this 60-minute bearish fair value gap was created, right? So now anything after this line, we have this 60-minute bearish fair value gap on our screen now. So now this right here is an anticipatory reactionary point on our structure time frame, right? So on our structure time frame, we have a bearish fair value gap right there. On our entry time frame, we got a break in market structure right there, okay? And we're at our narrative time frame anticipatory reactionary point, right? So now these are, you know what I'm saying, these are the PD arrays that we are looking at because of what price, the signatures that price is giving us, right? We're picking these because of what price is giving us. Okay, so now we come back down, right, to our entry time frame, right? We're on our entry time frame here. Okay, so when we take, this is when we come back up and we take out buy side, right? We take out buy side as we're trading into our 1 hour, our 1 hour anticipatory reactionary point. So now, right, we've come into our narrative, right? We've got a break in market structure on our entry. Now we're coming back into an anticipatory reactionary point on our structure time frame, right? On our structure time frame. And then as we come into here, right? Look what price does here, right? Same old thing, right? We got a high here. Okay. We got a low here. All right. Got a high there. We got a low there. Okay. Price. Right. We took our buy side. Right. We come back up to our, we're at our anticipatory reactionary point. We push up above it. Right. Right here, we've taken our buy side. We push up above it, coming back into our breaking structure. Right over here, coming back into our breaker. We got a breaker over here. Right, we come back into our breaker. Right there, bearish breaker, close. Right, we come back into our breaker. Right, because anytime you have a anticipatory reactionary point, when you get to it, you want to know how far beyond it can you go. Right, we already looked, there was no hourly or anything higher above here. Right, there's no hourly or anything above it, above here. So now we're looking on our entry time frame to, as we get a break in market structure, right, what can we be retracing back to, not only on our entry time frame, but in conjunction with our structure anticipatory reactionary point. Right, so now we got our expansion, break in market structure. Now we got our retrace. Right, expand, we got consolidate, expand, reverse, retrace. Right, so now we're going into our retrace. Right, we come back down, come into our retrace, we come back over here into our breaker. Right, we come back into our bearish order block. Right, we're trading up inside our higher time frame bearish fair value gap. We create a high and a low inside this area. Right, we push up, engage with the high first right there. Right, taking out what? Buy side liquidity. Same thing we did over here. Right, we come here, we take out buy side liquidity, then we immediately displace down. Right, and we don't really got a fair value gap in there, but then we trade back up into the, we got trade back up into the order block, because while we consolidate, then we leave last up close candle at or near equilibrium. That's your order block. Trade back up to the order block, back up to the high of the higher time frame anticipatory reactionary point. Right, and then price trades back down. Right, and of course we've been trading in some high resistance stuff. Right, and then you see, but we're still respecting this area. Same thing, we're still in that same area. Right, still respecting that same area there, never coming back above this high right here, never coming back above that high right there. That was our breaking market structure. Right, that same area, and then we're selling down off of that. And that was all from when we first started watching it, from when we first tapped it on our entry time frame. And then this right here was after our structure time frame had come down and got the shift. Right, so right here we started watching it right here as we came down right there, because this is when that hourly candle closed, and as price dropped here below there, this is when we started watching for this scenario. Right, so all of this has happened. Right, and now on this scenario, our hourly time frame has dropped down below the low. Right, that's our structure shift. Right, our shift in sentiment. Right, we drop down there. Okay, we got a fair value gap there. Right, we don't trade back up into it, and then we drop all the way down to that bullish fair value gap. Remember the bullish fair value gap that we have marked out there. Right, we drop all the way down to that discount PD array. Right, we went all the way down to that discount PD array right there, and then we traced back up. Right, we came back up into that area there, respecting that. Is taking forever, but we're still respecting that area there that we was watching. You know what I'm saying? This is a whole lot of, this is over days and days and days, but it's the same concept. Right, so this is when our structure time frame gave us the shift. Right, we created a fair value gap there. Price traded down, pushed back into this fair value gap, dropped down into the discount PD array. Right, once it got down to the discount PD array, price turned around and came back up, right, into that imbalance right there. We had already traded to that one to use that one to go down. Now we trading back up here to trade into that one. But what are we doing as we coming back up here? We're taking out buy side, right? So price comes back up, take out the buy side, trade to the imbalance, and then sells off, right? You always want to see it come, engage that opposing liquidity, and then go back. But what you're looking at is, right, this was a 1 hour bearish fair value gap that we had already used to drop down from, right? So we already used this and dropped down from it, so we don't want to see price digging back up there. This is when our 1 hour time frame gave us a shift in sentiment. So now that we got that shift in sentiment on our 1 hour time frame, now we're on our entry time frame looking for an opportunity to get short, right? So as we're dropping here, if you are more aggressive, right, you could get short off of this to take it back down, to take it down to this fair value gap right there, right? If you're more aggressive, if you be like, okay, I want to participate in that move, there's nothing wrong with that. But if you feel like, okay, I'm chasing price because we dropped down and now it went too far, hey, that's up to you, right? But then you wait for it to go down there, then it comes all the way back up, take out that buy side, and then boop, right there, and then it eventually goes back down, you know what I'm saying, down your street in the Range Rover. So hopefully I didn't lose you, Jim Big Bird, or anybody else that's watching this. And if it don't make sense to you, watch it again, and hopefully it makes sense to you. I'm assuming this works for internal liquidity as well as external liquidity. I am often working with the market maker buy and sell model, and I'm looking for a point of interest that will be retraced to in order to get a trade entry. Okay, you just answered my question. All right, I'm glad I answered your question. But yeah, that's why I say price is fractal. We was looking at it over a large period of time, but it works the same. Price is fractal, so it works the same way on every time frame, right? Because I always, y'all know, I like to use the example, right? I like to use the example of we gonna look at. I'm just gonna come here. I'm gonna mark out from here. I'm gonna go from this red candle here. Well, let's find one that's right on the top of an hour right here. This red candle here, that's the open, right? And then we're gonna stretch this out 60 candles, 60, right? And this is the close of that candle there. That's 60 candles, okay? So right, this is 60 candles. So on a 1 second chart, right, on a 1 second chart, this is what we would be. Let me do this right here. Just for a second. Come here. Okay, so on a on a 1 minute chart, I mean on a 1 second chart, this is what we'll be looking at. This is what you'll be seeing, right? But on a 1 minute chart, like on a 1 second chart, this is the price action you'll be seeing right there, right? You'll be seeing that price action right there. But on a 1 minute chart, that would look like, see, this is the high, that's there to the close. be a red candle because it opened there and it closed there. And then this is the high, and this is the low. That'll be a red wick. Uh-oh. All right. So on a 1 second chart, this is what the price action looked like. On a 1 minute chart, this price action right there, let me do this right here because it keep flashing. All right, so all of this price action right here, this is a 1 second chart. Right? And then this is a 1 minute candle. Right? So this, and that's why I be like price is fractal, because price is doing the same thing on every time frame you look at, but it just depends on what time frame you're watching at that time. Right? So it don't matter if you're looking at daily charts, minute charts, hourly charts, 4-hour charts. It don't matter what chart you're looking at, right? Price is going to be doing the same thing, because for this example that we're using, right? You had price come down, right? Take out a low, push up, right? Above a high right there, right? Come back down, take out a low, right? Push up above these highs right here, break down, take out that low, create an inversion fair value gaps, push up, right? Respecting the inversion fair value gap, respecting the balanced price range. You got stuff going on in this little fractal of price, but all of this fractal of price on a 1 second chart would look like this one candle right there. And that's the same thing when you look at a daily candle, right? If you look at a daily candle, now that I can move all this right here, right? Because, I know a lot of people be like, well, Tim, that don't make no sense. You just making something up, right? Okay, let's go somewhere. Let's go somewhere where we're not making something up, right? And we'll put it on a 1 day, close this off, boop, right? And we'll put it on a 1 day chart, right? Put it on a 1 day chart. And then we're just going to, let's highlight a day that's got a long wick. All right, let's come here. This day got a long wick, right? So that we can see some movement. All right, so we're going to highlight this orange. We'll look at that day, and then we'll also look at today's price, right? And we'll highlight this one blue. Okay, so now let's go down to, this is a day, right? So now let's go down to a 1 minute chart, right? So we're going to go to a 1 minute chart and look at that first day, right? And we can't even go back that far on the 1 minute chart. So we got to pick another day. We gonna pick another day where we can actually go back that far. So let's pick a day that's closer. All right, so let's pick this day right here. All right, so we'll pick this green day right here. No, let's get close. So we'll just pick this red day right here. Make sure we can see it. Okay, picking that to that. All right, so this is highlighting that 1 day. The start of this candle to the start of that candle, highlighting that 1 day. All right, so we'll go to 1 minute chart. All right, then we'll scroll over to that day. Okay, now see that one candle. All right, let's do this right here. I'm gonna put this on. New, come here. Go to 1 day. 1 day. Right. This candle right here. That candle right there. What day is that? The 30th. 10:30. Oh, I'm on the wrong chart. I'm like, well, I can't see it right there. Okay. So this candle right here, right, is this price action right here. Okay, these are 1 minute candles, right? So, and that's why I said don't matter what you looking at, price is fractal, right? And looking at the daily chart right there, all we did was take out the hot air and trade, didn't take out the low. Right, don't look like a whole lot went on, but when we look at the 1 minute chart, we can see there was a whole lot of activity that happened inside this candle. That's the concept I be trying to explain when I say, hey, I'm looking at this as if it was a 60. This was a 1 second chart. All this movement would just be this one candle. So all this movement here is just this one candle. Right, and then even if you look at this on a 15-minute time frame, right, on a 15-minute basis, right, these are 15-minute candles, right, and all this movement is this one daily candle right there. I just like to minimize the amount of time I am sitting on the lower time frame. Too much temptation. So if I can stay on the higher time frame for longer before switching down, that helps keep me. Yeah, that's what I'm saying. Don't go down to your, if you can't resist the temptation, or if you find yourself trying to jump in moves and getting your head bust, like do it to the effect of, okay, I'm not gonna, set yourself some rules, right? Set yourself some rules. Just be like, hey, unless I get like a breaking market structure on my structure time frame. What's your time frames that you watch? What are your time frames you watch, Jim? All right. What's your entry time frame? What's your entry time frame? Jim, this is your conscience speaking. What's your entry time frame? Okay. We ain't getting no feedback from Jim. So we just gonna say, Jim, if your entry time frame is the 5 minute, right? Right. I want you to look at the daily, the 1 hour, and the 5 minute as your time. This is going to be your narrative. This is going to be your structure. This is going to be your entry, right? So you're watching the daily chart to figure out what your narrative is, right? Watching the daily chart to figure out what your narrative is, okay? So we're looking at the daily chart here, and just say, like, over the last couple of days, right? We see price had come up above this high, and then we see price came down and took out this low right there. So we know by looking at, let's look at this. So we're going to make this here. We're going to draw this like that, right? So whenever we see price like go up, take out liquidity, then retrace back down, anytime we see that retracement move like that right there, we know on our entry time frame, right, that we'll be able to identify a market maker model, right? So if we go down to the 5 minute time frame and look at that space of time where we drew that out, we can see that there's a market maker sell model that has played out. right? Right, we can see that there's a market maker sell model that has played out. Okay, and since we know that the market maker sell model has played out, right now, right, we know from here to there, we just completed a market maker sell model. Okay, so now what we can be looking at, right, since we know that this completed a market maker sell model, right, now that we're down here and we're accumulating, now we can look back, right, to say, is this the start, either this or this bigger one or this smaller one, is this the start of a market maker buy model, right? So why, now that we've completed, we come on, get out of there, we've completed the sell model, right? Now we can look back and say, hey, is that the start of a buy model, right? And then, right, we're sitting here, we're still, doing, right? And at this point right here, I think this is what mess a lot of us up when we're on our entry time frame, right? This point right here gets us this, and then we come back down and do that. This is what tears most of us up, right? And why is that? Why does this tear most of us up? Because we're looking at this move here as a bullish break-in market structure, right? We're here, we're consolidating here, and then we move up and we say, oh, we got us break-in market structure, we finna go to the moon, and then we end up getting our head bust, right? Because we're looking at that as a break-in market structure, when if you look closely, this is your entire drop right there. So on this time frame, right, that right there would be your bullish break-in market structure. Because we're so zoomed in, we're just looking at, hey, this right here. Because when we're watching price like this. This is what we're looking at. We're not looking at it zoomed out like that. We're looking at price like this right here. Right? That's what we're looking at price like, just like this. Right? We're looking at price just like this. See what I'm saying? So now we're watching this and we say, hey, man, we done got up above this right here. We got us a bullish break-in market structure. We finna go to the moon. Right? Just to get disappointed, right? Come back down and bust us in the head, taking out this liquidity. Okay? So we don't want to get zoomed in on that lower time frame. So what we want to do, right, we've completed this right here. This drop here completed the market maker sell model. So now on your structure time frame, right, on your structure time frame, now what you're looking at here, we come here, we drop below, right, we drop below down here on our structure time frame, we complete our market maker sell model there, right? We start trading, we take off there, make a high, right? Then we come back down and we take out a low, right? This is our structure time frame. We come down, we take out a low, and then we come up here and get a break-in market structure right there. This is when you want to start watching your entry time frame right here. Once your structure time frame has attacked opposing liquidity and then giving you a break-in market structure. All right, so remember over here, this was the fake me out on the lower time frame when I said this when people get their head bust. So now we're going to look over here to when we get our actual break-in market structure and go back to our entry time frame, right? And now you see that this is the point where we got the real break-in market structure there on the entry time frame. Right? Hey, what's up? I'm good. How you doing? That's when we got the real break-in market structure on our entry time frame. Right? We came over here. This was the fake me out. right? Then we drop down here, did all this right here, and then this blast off there, coming above them highs. Now that's when we got the real breaking market structure on the, and this is the time where you can be zoomed in, because when we come up here on our structure time frame above that, now we're watching on our entry time frame, right? We're watching on our entry time frame now, and you see, right, we come up above that high, right? We got a high, we got a low, we engage the low, we displace away, we trade back down into the range, and then now we're going. It's the same thing over and over and over and over and over. You're looking for the algorithm to engage liquidity, right? You're looking for it to engage, because it's the same thing here. Just in this case, we are already thinking we're going to go up. So as we come above here, now we drop to our time frame and we make this high and we make this low. Now we're waiting for it to engage one of them. Since we want to go up, we're anticipating it to engage the sell side first. But all the thing we're doing, even if we didn't know what was going on right here, we're waiting for it to engage one of them. And when it engages the sell side and displaces away, now we're looking for an opportunity for it to trade back for us to get long. You see what I'm saying? But since we're in tune and want it to go up, once it engages the sell side and displaces away, now we can pick any entry you want. We can throw a dart at the dartboard and just get in, because we already know it's going up, and then we see our signature of what we want. And as soon as it pulls back, now that's why you see Michael, he'll be like, I'll buy more there. Okay, I'll buy more there. I'll buy more there. Okay, I'll buy more there, because he knows it's not coming back down here. You know what I'm saying? Because he's already in tune. It already engaged with the narrative in the structure time frame, and now you're just on the entry time frame looking for the attack of liquidity, the break, and then the retrace. If them ain't your time frames, make them your time frames and start using those, JimBigBird. Hey man, hey, I think that's it for me. Do anybody got anything? I got to get on with the mentees at 7 for the homework review. So if ain't nobody got nothing, I'ma go sprechen Z with my sweetie, drink me some water, relax my vocal cords, and then come back at 7 to do this homework review. Let me see if anybody put something on. Nope, nobody putting on. What's up? It's my time. What's happening? I ain't seen you since the last time. It's my time. It's my time is the honorary gang member. Shout out, it's my time. That's it, man. I appreciate y'all for hanging out with me on this afternoon pop-up. On this, see what it say over here? You see how on my screen there? You see what it says? It said, warning, the stream current bit rate is lower than the recommended. I don't know why it's doing. I've never seen that before. But make that your time frame. But y'all say it look normal, so hey, I'm out of here. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action. Y'all know who it is. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you know how I blow it, man. Yo, y'all be safe out here in these trading streets, man. Gone.